Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the Bitcoin market. As usual, update on Mondays. So on the monthly chart, everything stands just perfect. We have one by one grabbers are forming here, and October's also will be, and probably should be then another grabber here. So all of them suggest taking out at the top, and this type of the performance that we see here is very typical for the clear bullish type of action. It's it's one of the best shape of the price when you see these grabbers are forming on the climbing through the MACD line, and then you can see straightforward acceleration. This is already the classic price behavior, and that's what we'll see here is, should be happy to us. So as everything stands absolutely great on the monthly chart, and that led us to keep a long-term target of the 75 in place. Market is not that overbought, because actually, if you remember, the reason why we suggest that section should start was the volatility breakout here. This is Jordan Apple long-term pattern, it's directional pattern, and it suggests at least 618 extension of the whole upper direction. So it should be A, B, C, bottom, 618 extension. The 618 extension with the minimum target stands right at the top, around 64, but we suggest that it might be and should be a bit greater. So 618 extension is just the minimum target by the volatility breakout pattern. So on the weekly chart, everything stands positive. You could see straightforward upper action. Here we see even the acceleration. Market not at overbought, and it already has passed through the major 618 resistance. That's the reason why we said last time that in fact on the longer term, market has no significant barriers for upward continuation, at least internal barriers and the technical barriers. Here's everything stands positive. For the trading purposes, you could focus only on the most recent upward swing, starting from the C point to this action, to this current top, and use some retracements inside of this swing for taking the long position. So to keep this scenario valid, market should not drop back and drop below the 40,000. It should hold C lows intact. Currently, actually, we do not see any signs that this could happen in nearest time. And here you could see even some acceleration compares to the AB leg inside of the butterfly, which is also a very good sign. So on the weekly charts also we have no problems. On the lower time frame, guys, actually a few things we could add, just because we had said everything already, and currently we could follow just one way, so using only one tactic, is trying to take the position on a retracement. That's all that we could do. So it means that our task is to foresee approximately where potentially this retracement could start. For example, right here, market hits 56.68. This is 127 extension of this downside action that we have talked about last time. And we said maybe market could flirt about around this area. Once we'll hit 127, maybe retracement will start. So it means that currently, if it will start, because overall action looks and stands very strong, we need to keep an eye on possible support areas. Since market is not at overbought on the weekly chart, it means that pullback here should not be too significant. And if you remember, last time we also talked about the bread body buy trade. This might be a great solution to the current situation. So if market will drop to some major support area, for example 30% support, then we could consider taking the long position based on this potential bread and butter Jordan Apple pattern. That's actually this scenario is valid right now as well. So currently we just need to follow the market and see where the retracement will start. If it starts, we're using well-known tools that we use usually for position taking. It might be some catching some patterns such as the catalyst triple 2 buy, double repo by the Jordan Apple, and other retracement stuff that we could use around major support areas. If here we will not get any retracement, the market will keep going higher, well, that it means that we just will need to wait for next opportunity that we will get. Theoretically, you could try to jump in right in a running train, but it's always not very comfortable because it provides worse stop placement, and every time you're aware of the possible retracement that could start and cuts you in the wrong direction. So that's why for taking the position, it would be better to buy the dips. For speaking on the levels, mostly they are the same. Our preferable level, if you remember, was around 51. This is a confidence support based on the major 30% support area and 618 with the most recent upward swing. Another level that seems interesting is 53 because it corresponds with the previous. Here are some spikes on the top, and it's also a fib level, it's minor fib level from these lows to this top, 30% retracement. Currently, market is forming the bullish flag pattern. So if you're a follower of the classical school of trading, since market currently not at the overbought, theoretically you could consider trying to buy the inside of the flag while it's valid with the stop placement somewhere below the flag. So following the classical logic, so if market is forming the bullish continuation pattern, it should continue upward action and flag should be broken up. Correspondingly with the placing stop somewhere below these lows, its solution, if you do not want to wait moderate retracement, you could, and you want to take the position immediately. So this is the pattern that you also could consider. Currently we are not talking about taking short position. Well, finally on the hourly charts, nothing really interesting. We have the tendency, we have the trend line, which is also a classical tool, and again it points on the same lows as in the trading the flag strategy. So placing stop below these lows could let you to jump in if you trade on the lower time frames, or you do not want to wait for deep retracement, or you think that this will not happen in the nearest time. So this will be the solution. This is very short-term setup because it will be broken as soon as market will drop below it. It means just the deep retracement is started. So in this case, you will be out right here. But this is the tool that you theoretically could consider if it corresponds to your view, to your trading plans and trading strategy. That's actually all that we have currently on the Bitcoin market.